Nicholas here from BG Trading. Hope you are well. Today is July 27th, 2022. And we normally don't record two videos about the same stock 2 weeks in a row. But this time we have been requested by a lot of people from a lot of members from Buy, Grow, Sell Strategy for Share Traders community. Which, by the way, if you're not a member yet, what are you waiting? We got a lot of great quality content in there. Maybe you requested to whether ZIP is a buy still, or they should be holding, or they should be selling. We covered the fundamental and the technical aspects of the company last week, so I'm not going to be talking about that. What I'm going to teach you is what strategy we use to know when we should be selling ZIP. That's all about strategy. Whatever I think, it makes no difference. But whatever the strategy says, whatever our indicator says, that's what we're going to take in consideration. So let's have a look. Just want to remind you, this is not a financial advice. It's just as from BG Trading, sharing with you how we set up our strategy to know when to buy and when to sell, how we set up targets, stop losses, and how we apply the KPIs to know exactly where to buy and exactly what we're supposed to be selling. If you like this content, please subscribe to the channel and share this video with someone that you believe would be interested. So let's jump straight into what's happening first with the macro environment. So today, actually last night, IMF downgrades global growth outlook. What does it really mean for ZIP holder? Because I'm now a ZIP holder for the last 3 weeks, which is, by the way, has been a great journey. We up 103%, as you can see here. Look, this is no manufacturer result, guys. This is real result from my ComSec account. Seriously. So it's good. So what we do with the money, we take some profit and chuck into property. It's all about our long-term investment is actually property. And we use trades to maximize profits. So anyway, back to what IMF says. First thing for me, really, I spend a little bit of time reading those things, but who really trusts on IMF forecast or RBA forecast or Fed forecast? Really, we're being let down by RBA last year, big time. So the trust about those entities are not really taken into consideration now. What I really like to consider is the chart formation and understand where the company is at fundamentals. As you know, ZIP at the moment is trying to impress its shareholders by breaking even and start show some profitability in 2024, and that is what the market is sort of looking at the moment. Yeah, perhaps it is, but thanks to short traders, a lot of people got caught out at higher prices. But if we look into what ZIP stock price, according to our strategy and according to the financial situation of the company at the moment, it is money is costing more now, but for ZIP they are also increasing the revenue exponentially, also increasing fees to customers. What I can only suspect is the fact that the macroeconomic outlook is pretty poor. Rise of interest rates, lower liquidity in the market. A lot of people have to start using back those services because they still got to buy some. People still want to spend. But how are you going to spend if you don't have money? Maybe just go through ZIP, go to Afterpay, go to Sezzle, whatever heck platform allow you to split payments. That's what I can only hope for. That's what probably is helping the stock price over the last 3 weeks. So you see this pink line here. Pink line is the moving average for the last 250 days. This is what I like to consider over the long term. If you're looking at stock like this over the long term, you want to know where is the SMA 250. And this is, again, BGS 20 strategy KPIs. Why you want to know that? Because that's where the actual long-term technical value of the stock is. And then a lot of people can argue that it is a high-level analysis. It is, of course it is, but the market doesn't care. Once ASX has allowed short traders to be able to borrow against and open sell positions to profit, the whole market became a big bullshit gamble. That's what it is. And if you don't have a strategy, you won't be able to profit out of that because you hope for something that maybe never happens, or you just time in the market at the wrong time. Okay, and then that's when the fundamentals kind of works but not make sense sometimes. This is exactly what's happened with Zip. Yeah, so the company now is obviously sell way more. It was selling back in 2020 when it was at was trading around $9, $8, $7. It's actually in better position. It's actually in better position despite some bad debts. Maybe some people will start arguing potentially. But what I want to get to this is now if you held the stock all the way down, right, from this bearish intersection here, that's where we should have sold. That's why we sold. We sold together with some VIP members. We took a little small stop loss here, but we sold here. So we need to. We want to be holding this stock on the opposite way, right? So you don't want to do the opposite. You don't want to sell on the way up and hold on the way down. That's exactly what people are trying to do. It makes absolutely no sense. What I want to get is, if you held all the way down and now we need to hold the way up, that's the thing. You hold the way up. We don't know how high it's going to go, but for me, really simple. If there's momentum in the market enough, it's very feasible that the stock could reach back on 250 moving average, which is currently sitting around $3.50. You've seen that in the past. Look at this. Zip has been trading above the 250 moving average for years. And look at this. This is where it's been trading under the 250 moving average. And then now, obviously. And everyone now thinks, everyone, a few months ago, everyone thought that Zip was going to go broke. Now everyone's going to be talking good about Zip. That's a problem with the market. But the truth is, companies there has a great platform, and we don't know where it's gonna go, how high it's gonna go. But what we want it to be is we want to be holding on the way up, and wait, holding on the way up, make as much profit as we can until the first reversal indicator. The first reversal indicator is I'm gonna give you three indications of a potential reversal. The first one, you're going to use past data here just to show you a few things. So the first one, when you actually looking at the chart on Heikenach, that's what we do here in some of our KPIs, use Heikenach. So what we want to see is, you see the strong momentum, the candles, this shows the momentum in the market. When they start slowing down here and followed by a red candle, that's our first red flag. First red flag, straight away, this slow of momentum to the upside, right? So now you can sell the stock in the first red flag, or you can wait for the second red flag. What is the second red flag? The bearish intersection level 2. So if you don't know what bearish intersection or bullish intersection is, you shouldn't even be trading. So you want to learn about, take a look on our website, bgtrading.com.au. We have an online course. It takes 5 hours to get the course out of the way, but the knowledge that you get in these 5 hours will allow you to protect against potential loss, be able to understand when to sell stocks, be able to understand when to buy stocks, and much more. Anyway, up to you. Now, look at this. This is another indication that we have a reversal. Okay, the red candle after this green candle. And then when we have the first red candle no Rekenach, this is the first red flag. Second red flag is bearish intersection level 2, which I'm going to show you now as well in the red square here. It's basically the candle, let's say potentially still holding on hopes that it's going to go up more. That's fine, not wrong about that, depending on each level of the strategy you're using. Now, if the candle crosses the yellow line and start trading under the yellow line, that's when you don't want to be on the stock anymore. You want to close your position right here, and you don't want to hold the stock. You don't want to hold ZIP or any stock when it's trading under the yellow line. Gets really dangerous. Now, the final red flag is the bearish intersection level 1 right here. This is the final red flag, and that's where you need to get out, regardless. And that's where a lot of people failed back in October last year. This was the last red flag, and nobody really cares. Now, if you have used BGS20 strategy, you have sold. Simple like this. Guys, overall, for us, ZIP is a hold. It's not a buy because it's trading in the short term. It's trading at the FOMO area. FOMO area is anything above 10% from the SMA 40, which is the red line. This is anything above is FOMO area, and you don't want to buy more. You don't want to be buying, but you want to be holding, right? And again, this is not financial advice. It is based on our very same indicators and KPIs from BGS20 strategy. Let us know what you think, and good luck, everyone. Incredible, great week. I'm going to be posting another video about 3 stocks that I believe are currently trading in the buying area tomorrow. So stay tuned in the channel. Have a fantastic day. See you next video. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.